All right, Simon. Last time you and I spoke was about 3 months ago or so, and the conversation was about, well, really, it was about a previous conversation that you and I had had about 6 months before that, in which you told me that you expected bad things to happen in the economy. And then when they didn't happen by the time we were talking last time, but the first quarter of last year, I asked you what went wrong. And you basically told me that nothing has gone wrong, but that matters have been merely postponed, and essentially making the argument that we are in a recession already, but that not all data was showing it. But so that's remained the case. I mean, the stock market keeps going up. The S&P is up 20% year to date. The GDP growth rate has remained positive. Inflation rate has hit a 12-month low, and the rate cuts later this year are expected to have an even more positive impact on the economic data that we see. And but now we also have this new level of uncertainty or complications with the attempt on Trump's life. So a bunch of things happening in the meantime. Where do you stand on your previous predictions, knowing all of that today?
Well, if you look beneath the hood, the US economy is softening rapidly. Jobs losses and the household survey, which is more accurate than the establishment, was down, was it 400,000?
Hmm.
Yeah, something like 400,000. Unemployment has increased to 4.1.
Which is
Well,
still a
like
good number.
if you listen to companies, they are in the process of shedding staff. The official establishment surveys are always behind the times. Just look at the revisions that have been taking place. Inflation has come down, but for how much longer? Oil prices have not come down. Food prices have not come down. General household expenses have not come down. The reported CPI data, frankly, does not capture the real cost of living that households encounter. So probably real inflation is probably around 8 to 10%. That's why your consumer surveys are so weak, particularly the University of Michigan ones just out. I mean, they're pretty horrific. Then, excuse me, question what everybody is assuming, that we get a rate cut and therefore we're off to the races again. But if you look to see what happened after all previous equity bubbles, December 1929, first Fed rate cut. What happened to the stock market? Minus 79%. December 2000, rate cut. What happened to the stock market? Minus 41%. September 2007, first rate cut. Stock market down 55%. And what we've got in the big picture, markets are assuming that wars in Europe and the Middle East are some distant phenomenon and no impact on markets. But if you go back to 4 years into World War II, US markets were not pricing in war elsewhere until, of course, Japan hit Hawaii. and then there was a complete collapse. Are we going to see the same phenomenon? I think we're going to see something pretty similar. Markets are assuming, excuse me, that Trump will win the election in November. But people forget how desperate the powers that control policy in Washington are becoming. It's very likely that, according to experts that I listen to, that the attempted assassination of Donald Trump, the Secret Service or the intelligence fraternity were not just incompetent, but were complicit. How can a guy walk across a field carrying a rifle, find a ladder which was partially hidden, to climb up to the top of the building, and people in the crowd shouting to the Secret Service, look at him, and they turn a blind eye? It's very strange. I mention this because the last thing that these powers who control the levers of power in Washington want to see is Trump in the White House. Will there be another attempt on his life? Likely. But more likely, we will see an intensification of the wars in Europe and in the Middle East that basically pits NATO versus Russia. And in the Middle East, Israel will launch a major attack on Hezbollah in Lebanon and Syria. The question then is, will that bring in Iran, and will it bring in Russia? So what we should expect before the end of September is a massive shock to the system, either by an attack being made on Russia, perhaps propelled by a false flag operation that forces Russia to make the first move, or, excuse me, to follow what NATO in early May said to member governments, that there will be an attack on Russia, and that you should warn your population to stock up with food and other essentials. That only briefly appeared, I think it was in the Times in London, and then got deleted pretty quickly. So either we will have a physical attack, or we will have a cyber attack, or even, so desperate are these people controlling the levers of power, that somewhere there'll be a dirty bomb. So all I'm saying, we don't know what's going to happen. Something is going to happen, because this group know that if Trump got into office, not only would they be all, probably around 5,000 of them, in different sectors of ministries and administration be out on the streets, but that decades of planning to dismember Russia would be wasted. So the odds are pretty high that before the end of September, there will be a shock that will send equity markets and base metals down by around 40%. And this appearing at a time when the global economy is weakening. You can see it in the manufacturing data in June, slipping over, and even in the services sector, also slipping over. And the services sector has probably been pushed up by the strength of equity markets. So that, in a nutshell, is my big picture, that we won't see the trough in business activity until the early months of next year.
But you say we're going to see a reaction in the stock market and other asset prices by September of this year, 2024?
Correct.
Okay. What is going to lead that if we haven't seen the data in the business cycle pointing towards a recession or bad times in the economy? Why would the stock market be going down in the meantime?
Because the recession is becoming more and more evident. You have this massive concentration of valuations amongst a very few stocks. Take them out of the equation, and the rest of the market is either flat or falling.
Yeah.
They only need not even a big shock, but a shock, and the market is going to tumble.
But would what we see in the market then be worse than what we saw during the dot-com bubble of 2000 or the GFC of 2008?
I think we'll see something similar. It's very interesting if you compare NVIDIA with Cisco.
So are we talking about seeing something of similar proportions or or similar timing that you see it happening, or is it going to happen quicker?
Similar proportions.
Okay. What about timing? I mean, if this actually happens
I think
by
it said it's before the end of September.
Yeah, but I mean, how long does it go on for? I mean, these
it will go on until, I think, the early months of next year, when whoever is in the White House will then open the spigots fully.
Well, there's
I think the market is, every man and his dog assumes that either in September or before, the Fed will cut rates. What if the inflation numbers or the CPI numbers that come out before then are not as encouraging for a rate cut as the market is expecting? That you don't have a rate cut.
Well, that's something that
Powell
Danielle
has made it
Booth
very
also told me.
clear. We are data dependent.
Yeah. That's something that Danielle DiMartino Booth also told me, like, just what if we don't have that rate cut? But then you have Jerome Powell coming out and saying just this week, um, saying something along the lines of we don't have to wait for inflation to go down to 2% for us to start cutting. We could start cutting earlier, partly because, and this goes back to the thesis or the argument that this was really about currency wars, where Powell was really trying to keep the dollar up. And so now that everyone, the major counterparties of the DXY have started cutting rates, like the EU, for example, has cut rates already, he can do that same thing as well, regardless of what the economic data tells him. What do you make of that?
Well, I think there's a policy battle going on in Washington. Do we support the dollar or do we support the treasury market? The treasury market. Who wins?
Why not both at the same
I
time?
think my guess is that the guys who are controlling foreign policy, who want America to retain its hegemony, will be pulling for we support the dollar, not the treasury market. And we can do other things to support the treasury market, like empowering financial institutions to hold X% of their assets in treasuries, blah, blah, blah.
So that almost sounds like a solution to both problems, like, support the treasury and the equities market at the same time.
Yeah.
Well, so yeah, I mean,
but what I'm saying is the implication is if those who want the dollar to remain firm as part of their foreign policy, then Powell is not going to be cutting rates. I'm not saying that's going to happen. I'm merely saying we should consider it.
And that depends on who ends up in the White House then later this year.
Well, that leads to what I was saying earlier, that the group that control policy in Washington have become so desperate that there may not be an election. You have a war. You have something, you have a COVID number 2, which has been written about, spoken about, bird flu, etc., etc. The options that they have to prevent an election are quite large, war being one of them.
Yeah, how likely do you think that is? I mean, is that a mere possibility, or do you think it's becoming more of a probability at this stage?
I think ever since the failed attempt on Trump's life, it's become a much higher possibility, if not probability.
A lot is going to have to happen, though. I mean, how long are we away from the elections? Like 4 months ish, something along those lines.
Yeah.
So a lot of other stuff are going to have to happen. Like what else do you think could happen to lead to that scenario?
Well, if you take the war scenario, planning for it probably started in the second half of last year. And since early February, you've had movements of missiles, troops, a UK Air Force squadron into Poland. You've had the positioning of NATO troops in surrounding countries to Russia. And it culminated, as I said, in early May, this meeting in a Baltic state between NATO and member governments. The planning is there.
Yeah, but something is going to have to kick
How
off.
is it going to be triggered?
Yeah.
Is it a false flag operation, which they're trying to do? I mean, to give you one example, all the media chatter about how Russia bombed the children's hospital in Kiev. What really happened was something completely different, which is that Russia, with 3 hypersonic missiles, destroyed a deep NATO bunker, killing all allegedly 18 of the NATO officers in that bunker at that time. And some of the debris from the bombing fell on the children's hospital, which was nearby.
So then it goes back to, again, that question that I just asked that you basically already answered. It's like, what is going to kick it off? And that's one.
Can be so many. I mean, I'm just speculating, but attempts have already been made. Russia took control of the very large nuclear power plant in Ukraine right early on. Ever since then, Ukraine has tried to, well, they've fired missiles on surrounding buildings, never actually hitting the main building. But is this something they're going to do now? Then you had the other more recent flag operation by bombing the beach in Crimea, killing people. How did Russia respond? Deliberately against a NATO military site, not against the people. Now you've got NATO saying, confirmed by America, that we're sending longer missiles to Ukraine that can actually hit neighboring countries, hit further into Russia. And Finland has given access to America using their 15 military bases. What are they going to put there? The tension is rising. So all I'm saying is that NATO has positioned itself to attack when it wants to.
And everything that you're telling me here points toward uncertainty, right? It points toward just the population not quite understanding what's happening and how it's all going to unfold, which has typically been positive for gold. I mean, would you make that connection as well?
Oh, yeah, sure. Gold is telling you something. It's telling you that there's a very uncertain world out there, and that fiat currencies are actually going to not be wanted. And why is it that the East has been buying a lot of gold? Why is it that about 6 months ago, China's central bank provided a system whereby the population, through their bank accounts, can buy physical gold directly from the Shanghai Gold Exchange, and also on a never-never basis. And why is it that physical gold jewelry and these little gold nuggets that have been put on sale have been booming? And what Washington fears greatly is if the planned new BRICS currency, which is called the unit, which will be based on 40% gold and local currencies, local BRICS currencies, but all of them linked to gold. If that gets off the ground, it's the beginning of the end of the dollar's domination. How many countries will dump dollar assets and go to an asset that has substance to it, instead of one that, if you take the value of gold, of the dollar, from 1980 to today, it's now worth 25 cents.
That sounds like more like a long-term thing. That's, I mean, dropping the dollar doesn't seem like it's going to be an overnight or an
No,
over a
it's
year
not. It's
thing.
not going to be overnight. No, that's absolutely right. But the trend will be there.
And that's positive for gold.
It's very positive for gold.
Well, but basically, since you and I started talking, Simon, about a year ago or something along those lines, your view on the world has gotten more and more bearish. Does that, first time we spoke, you told me 2,500 gold price by 2025, so 2,500 an ounce by 2025. That was kind of your price target. But as you're getting more bearish on the world and more bullish on gold, is that changing that prediction? Do you think we're going to see higher gold earlier?
Sure. We're nearly at 2,500 today.
You don't think we're going to stay here until 2025 or beyond?
No. I think we'll wake up one day and the gold price will be 3,000, 4,000, 5,000. I don't know.
What year?
The basic message is you have to have gold in your portfolio, and preferably in a place outside the banking system.
So essentially just hold it physically. I mean, there's no other
option. Yeah.
Okay. What do you then make of the current kind of pause in the gold, in the bullishness in the gold price, though? Why are we pausing?
It's like all bull markets, you have pauses. And I think this one has been a desperate attempt by the Western banks to try to give gold a kick down.
But the other central banks are buying it.
Yeah.
The other central banks are buying it in the meantime.
Yeah. Mostly Asian central banks.
What do you? I mean, you're
West sells and the East buys.
And you yourself are in the Middle East. What are you seeing there? I mean, I don't know how much you communicate necessarily with the local banks or whatever, but what's kind of the sentiment on gold there?
I'll be honest, I'm not in touch with them, but everybody I talk to, bullish. I mean, bullish long term, not necessarily for tomorrow.
Okay.
It's an asset that you have to own.
Yeah. Okay. So that when you tell me, we could wake up one morning and it's $4,000 an ounce gold, Is that long term? I mean, is that what's the timeline there? Is it a 5 to 10 year thing, or is it more like a one to
No,
three
no,
year?
no. 1 to 2 years,
Okay, well,
probably 1 year.
okay,
Well, I mean, if I'm right on the global situation, even half right, that's where gold is heading towards.
with silver being kind of the double-edged industrial and monetary sword at the same time, do you place it in the bullish or the bearish category? Like, is silver the little brother of gold, or is it something else in the meantime?
I think I put it this way: gold is a secure asset. Silver you use as a trading unit, because I think that silver could explode more than gold over the shorter term.
Okay, well, we haven't seen that yet. I mean, on the year-over-year basis, now as we're speaking, they're both kind of gold is actually slightly outperforming, although silver is keeping nicely
Yeah, I
above
think
30.
from what I mean, I'm not a silver expert, but I listen to friends of mine who are, and that's what they're expecting.
Okay. So what happens in that situation? That's because that's what I'm going to ask. If we see a world where gold is $4,000 an ounce, but silver has that industrial side of things to it, does that mean that silver is more than double what it is? Is silver $50 at the time, or like how do I look at that?
I don't ask me what silver price will be. I don't follow it closely
Hmm.
enough. I'm
Okay.
merely saying that the fundamentals at the moment would suggest that gold will have a short term, 6 months, bigger rise than gold.
Okay. Okay.
Hence my comment. I use silver as a trading asset, gold as a physical long-term asset.
Hmm. Okay. When you say you use silver as a trading
Because
asset,
you can on silver you can argue the other way around, that if the world economy weakens, silver will be affected on the physical side.
hmm, yeah, that's what I was about to ask. Is when you talk about gold, you tell me have gold outside of the banking system, have it in your physical possession. And now you're saying silver is a trading vehicle. What do you use to trade silver? I mean, is that paper silver? Is it the silver miners? Like, well, what do you use personally?
Everybody has their own views on that. I'm not going to suggest what you should do.
Okay,
Some people prefer to have an equity stake in a silver company. Others prefer so it's up to the individual.
of course. You there's something that you do follow more closely is copper that I know of. What do you make of copper in the meantime? Because I understand the argument of, Dr. Copper, if the economy is doing well, copper is doing well. If the economy is not doing well, copper is not doing well. But then we have the added layer of complexity that is the supply side of copper. That's something you kind of specialize in. Is that something that, I mean, how's that looking to you right now?
Good question. I've just actually finished doing my numbering. The market is well supplied this year, despite the shortage of concentrates. China will buy. China's smelter capacity is dominated by the big smelters, who are well financed, well capitalized, good technology. And they, at the mid-year terms that have been agreed, it allows the big smelters to make money.
Hmm.
The medium-sized smelters, deals will be done with their local governments, the way things work in China, to allow them to operate not at 100%. But the smaller companies, newer companies, risk going by the wayside, not operating until the concentrate market comes back into balance. What is also happening on the refinery side is that China has been importing larger quantities of blister and anodes, larger quantities of scrap, and domestic scrap so far this year has risen sharply, but will probably slow down in the fourth quarter. But basically, China's refined production this year and next year will be higher than last year. The problem is it's put pressure on smelters outside China. There you will see a decline in production. The other side of the equation, of course, is consumption. And if you look at the internal industry data, despite all the market talk, growth is pretty flat, like around 1% this year globally, and maybe 2% next year. So we have, interestingly, the market was in surplus, where are we? In 2023 to the tune of several 100,000 tons. This year, the market will be in surplus of 150 to 200. So that's a balanced market. But next year, with the dollar falling, inflation resurging, everybody will be wanting to replenish stocks of cathode, copper and copper alloy semis, products, components. And then you will have the financial community wanting to buy physical copper and futures. So you will see prices rising very sharply next year on the back of a significant deficit. Significant. So we have copper price hitting a low by early next year of 6,500 odd dollars and peaking by early 2020, where are we, 25, 26, by early 27, if not late 26, of around 14,000. What happens then is a macro development. You would have had rising global inflation, rising inflation in America. What are the bond vigilantes going to do, particularly with the dollar falling sharply? So 10-year treasuries, to take one example, will go to over 10%. What does that do? Crashes the economy.
Yeah.
So you'll enter a period of maybe 27, 3 to 5 years of rolling recessions, if not depression. And therefore asset values, other than your monetary assets, will collapse. So we get into the early 2030s, and then hopefully the big global powers decide to work together, split up spheres of interest, debt will be washed out, and we go into a long period where global GDP reverts back to its historic average growth seen since 1900 of around 4% a year. Then you're in a bull market for copper and other base metals.
In the 2030s, though, nothing in the 2020s.
Exactly. So really the big argument is, which is the bigger force, the macro or the new drivers of copper consumption, whether they be renewables, EVs, data centers, expanding the grid. If you go into a serious recession, depression, the money is not going to be there. I mean, you can, if Donald Trump got into the White House, you can put money on the table that one of the first things he would do would be to cancel all subsidies for EVs, solar, and wind. Then you have to ask the question, given the fiscal situation in Europe, how much longer can European governments afford subsidies for EVs, wind, and solar? So it's a battle between between the macro developments and whether the new drivers of copper consumption can outpace the macro developments, and I don't think they can. I mean, there's a lot of emphasis being placed on data centers, but I was reading a paper by a guy who designs and operates data centers, and he was saying, watch out, fiber optics are already in the data centers, and the risk is that they will take over a large section of the wiring that goes into data centers. I mean, take EVs, the world's biggest producer, maker of car wiring harnesses, which is a Japanese company, actually said to an industry meeting, was it 15 months ago, 40% of all copper wiring will be replaced by aluminium in EVs.
What I'm also thinking, though, Simon, is if you're right on the war thing, isn't that going to disrupt transport routes and the way we have it right now?
Yeah, no question. And what does that do? Inflation.
It means higher copper, though. I mean, if you not only you need copper, but you need copper in the right place at the right time. And if the copper cannot get from Chile to China on time, then that could push the prices.
Hold on a moment. There is a redistribution of supply chains into China. More and more of China's import requirements are coming from Russia. Cathode. Where they are vulnerable would be the concentrates.
Okay, so what does that then mean for the copper? I mean, does that not still mean higher copper prices in that meantime?
Let's answer the question another way. How much copper does China hold in its military, excuse me, and social stockpiles? It's a bigger number than people think, much bigger.
So you, I mean, what we're seeing, you don't think that's real? That's not the real.
No.
Okay, interesting. Well, wouldn't that same argument apply to pretty much all other base metals, though? I mean, would you expect crashes in all base metals before 2030?
Oh yeah, no question. They'll all follow.
Okay. Even the obscure things. I mean, I don't know how closely you follow tin, for example, but there's metals
I
that have
don't
their own
follow tin.
dynamics. Okay. Yeah. Well, maybe you should.
I have not followed tin since we had the big tin crash in the 1990s, because I was accused of fomenting it, because a then very large tin producer in Brazil, I and a friend of mine persuaded them to be 100% short.
Well, there's even more interesting developments in the tin world right now. I don't necessarily want to get into it, but I'd be very happy to get your thoughts on it if you eventually end up looking into it. What would it take for you to look into tin? Who do I have to pay for you to look into tin?
Why, are you long of tin?
Well, I may be.
Yeah, I'm not going to go back into tin, thank you.
Good.
I
No,
knew
but it
it
makes, I mean,
I knew it inside out in those days, and
yeah, it's. I mean, it goes back to what you just told me that interests me here specifically. I'm just kidding on tin. Tin is really an obscure metal. It's a small portion of what goes on out there. It's interesting,
sure,
but
sure.
it's small. What so? But base metals though. I mean, just
Well,
anything. I
the
mean,
base metals, they're all, what drives base metals is the macro environment.
hmm,
I mean, we had this squeeze on COMEX, which had nothing to do with the physical market. It was COMEX stocks were low. The problem is that what's deliverable to a COMEX warehouse is not necessarily deliverable to an LME warehouse. So the big guns saw a situation and played it.
that makes it even more challenging to predict who has what in stockpiles, though, and yeah, I mean, makes it even more challenging for me to kind of understand what happens to base metals in that situation, just of how divided the world really is in terms of the supply of the base metals. Like it seems to be the end user of the base metals still seems to be heavily weighted toward the West, but a lot of the production, refining, and all these things happen in the East. And so that bifurcation of the metals market as a whole makes it even more challenging for me to understand. Do you see that continuing? Like, is
Oh
bifurcation going to
yeah,
be the name of the game?
it's. I mean, let's just look at a few basic things. America's consumption in recent years has basically been flat. So what little that they have needed to import has come in from South America. Now you have refining capacity increasing significantly in Europe by the major smelting refining company. So they are more supplied domestically than having to rely on imports of cathode. Then you have in China, as I mentioned, more and more cathode supplies come in from Russia at significant discounts.
Hmm.
So China's wire rod and brass mills will increasingly be fed by cheaper copper than the global average.
Yeah.
China is also supplied by LME off-grade material from Africa, which gets sold at a discount to the LME price, but whose quality is almost equivalent to an LME brand. So China's, whether you're making a cable, magnet wire that goes into an appliance for export, or a copper tube that goes into an appliance for export, their basic input costs are lower than the global average. So they helps them undercut other competitors.
I'm just writing down kind of a summary of what you told me so far, Simon, because I know they have to run in a couple of minutes, but what I'm making of it so far is that your predictions generally stem from overall bearishness on Western economies. You think wars are likely, you think there's a lot of uncertainty. That uncertainty is driving you into bullishness on gold and silver. So you're bullish on gold and silver. Silver more so over the short run. Gold, you're bullish over the long run. You think physical assets should be kept in portfolios over the long run. You are bullish food and energy because you're bullish inflation. I mean, you think that inflation is going to keep.
I am particularly bullish on food.
Okay. So that's agricultural
Very
commodities.
bullish. It's all part of households should be long with their daily consumption of food.
Well, what does that mean? I mean, rice in bags and
whatever an average household buys, whether it's vegetables, meat,
canned tuna. That's what I buy. That's
stockpile.
Okay.
There's going to be a global shortage of food.
Okay.
It's already starting.
And then, well, but okay, so bullish on food, particularly bullish on food, and with food, I assume inflation, so energy too. I mean, bullish energy.
Energy. So households should keep their oil tanks topped up. Don't let them run down and then have to fill at higher prices. Keep them topped up.
Okay, so same thing as food. I mean, stockpile of food and energy.
Absolutely.
Okay. And have physical gold in your possession. Again, yeah, I suppose that for your grim view of the world, that does make sense. And it also kind of makes sense. The last thing we just talked about.
I would say realistic view.
Yeah. Well, I'm hopeful. It might be because I'm too young and naive. I'm definitely naive. I can attest to that part. But I'm hopeful that you're wrong. Like I can see where you're coming from, but I hope you're going to be wrong because that doesn't sound like a world I want to live in.
I hope also that I will be wrong.
Yeah.
But you just add up the dots and it's a long hope.
Well, and with that, knowing that view, you just told me you're bearish on pretty much all base metals up until, and specifically for copper, the 2030s. So the 2030s is when you
hold on. You go from the low point being reached in the early months of next year. Then you have 18 to 2 years of an inflation surge. And then you get, as I said before, copper going from 6.5 to 14,000.
Yeah.
But then you want to be out. You don't want to be the last guy on the dance floor.
That's by so you say 2027 then.
Yeah. Late 2026, early 2027.
Okay. Yeah.
Then you're out of everything.
Well, okay. Yeah. So bullish gold and silver, bearish Western economies, bullish food and energy, bearish base metals, besides what you just told me that we're going to see during an inflationary surge. Okay. Well, that makes sense for now. I think we should pick this up in a couple of months. Unfortunately, it is as you said, grim view. Hopefully not true. Let's maybe sit down again after the elections and see what happens then,
Yeah,
or what has happened.
absolutely. If there
And
will be an election.
if, yeah, that's the other point that I should have written down, is that you don't, I mean, you suppose there's a chance that there won't be an election because you think there could be a war. That'd be interesting. So, well, hopefully there is an election, and hopefully we sit down and talk about what's happening then.
And
But
hopefully Trump gets into the White House, because
hmm,
his number two, Vance, shares exactly the same views as Trump does regarding Ukraine and wars and global hegemony, etc., etc.
that's right. Yeah. Good. Well, Simon, thank you for your time. Let's cut it here and see where that brings us over the next couple of months. I hope you're going to enjoy the heat over where you're at, although I think that's hard. But thank you so much for investing your time in me. It's been a pleasure.
Pleasure. Pleasure. Thank you for having me.
All right, moving on. I am going back to the US, Arizona specifically, where I'll be looking for copper and maybe a bunch of other things. And I'm going to be hearing about it from Steve Robertson, the company's or the president of Prismo Metals. Prismo is listed as PRIZ, that'd be PRIZ on the CSE in Canada, where an average of about 56,000 shares trade each day, with a 52-week high of 37 cents and a 52-week low of 12 cents. With a market cap of about $10 million and about 47 million shares outstanding, today this is a 7-cent stock. I'm not doing a full company overview as I normally would, because Steve and I just did an overview about a month or so ago where we went pretty in depth on the Prismo story. So I'll direct your attention to that video instead. I'll link it in the show notes or somewhere around here. And I'll also remind you that it is your responsibility to head over to the company's website as well as setterplus.ca to look at all the numbers yourself to make sure you're getting the full picture and only the factual information, because there was also a capital raise here with Prismo that we're going to be talking about, which will have changed the capital structure. That all said, Steve, why I wanted to speak to you today is to basically get a quick update on how things are going and what the plans are, because since we last spoke, you have now closed a $1.1 million financing at 17 cents with a half 2-year warrant striking at 25 cents. But, and maybe more importantly, you've also received a drilling permit from the BLM for 10 drill pads. You want to do 5,000 meters of drilling. So I want to talk about all that, starting with the money here for a second. $1.1 million added to the treasury. Where does that bring you in total in terms of cash? How much money do you have?
Yeah, well, we've got the 1.1 million that we just brought in, plus we've got the Vizsla shares. We've got 500,000 Vizsla shares, which are very liquid. So that's gives us a good solid cash position for our day-to-day expenses, but also for starting exploration down at Palos Verdes.
Okay, that's something we're going to talk about as well. By the way, I forgot to mention in the intro there, but as you mentioned, you have 500,000 shares of Vizsla Silver. They're currently worth about $1.4 million if you value them at market. How do you look at those shares, and has that changed since last time we spoke? Like, would you sell them to finance a part of that drilling in Arizona?
Well, they're very liquid, and it gives us a real good cushion so that we have flexibility in our planning going forward. We can let the logical plan drive the business of the company instead of what the bank account looks like. It just gives us the options to be able to do different things. So we feel very strongly about the Panuco district and the potential there. So I think that hanging on to those shares would be a good option for us. But we will liquidate them if we feel that that's the best path forward at that particular time. So there's no structured plan at this point.
Okay, so see as you go, basically. Well, what is that going to depend on? Is it depending on your stock price and where you can go and raise that money to drill Arizona? Or like, what do you see it depending on?
Yeah, just the immediate needs on the projects mostly. And so we feel that we need some cash right now, but we're not quite ready to go and go to the market. For instance, right now we're in the middle of the summer doldrums. So, it gives us a good option to be able to raise some cash if it's needed immediately.
Is there a price target that you guys are speculating on internally where you say like, oh, I wish we could raise money at X, 20 cents, 30 cents, whatever that might be?
No, I don't think we look at it quite from that perspective. I mean, we know that it would be great, of course, to raise money at higher prices. That's always the case. And but we also are very realistic, and we've been in this business long enough to know that, you know, money that we raise at a lower price is what's going to put money in the ground, which will get the results that are going to get our share price up. So, you know, we don't begrudge the fact that we're raising money at a lower price. It's an opportunity to bring shareholders in and allow them to make some money, and then give them, you know, give them the opportunity to take some money off the table when we do raise at a higher price, and we can bring more shareholders in. So it's just part of how our business works. And, you know, companies are always looking to raise money at higher prices, but it's having the opportunity to go out and do the work that is actually going to facilitate that.
But to go back to that treasury, $1.1 million in cash that you just raised, what's the split on that money going to be in terms of G&A versus what's going to go into the ground in Mexico?
Yeah, we don't have a formal split on that because we know that we're going to be doing another financing coming up when the market allows, because we're going to be launching the exploration at Hot Breccia, and the current cash available isn't going to be able to facilitate that. So some of this money actually, I mean, we just posted a bond for the project in Arizona that came.
How much was that, by the way?
It was 65,000 US, I believe.
Oh, okay.
Yeah.
Okay.
So not a lot of money, but I mean, those are the sorts of things that we're doing now that we've got a cash balance in the bank.
Okay. Well, so okay, but so how much is the drilling in Mexico going to cost?
It's probably going to be in the order of $500,000 to 500,000.
Okay. And then G&A, there's no major changes. I mean, I know Alain wants to keep it low, like keep people off the payroll, only get paid for where you work. What are you thinking the G&A is going to get up to this year?
Well, yeah, it's hard to predict that because, like, a lot of the my time, for instance, is going to be dedicated specifically to individual projects, and so it wouldn't be so much corporate. Our G&A is probably about as high right now as it'll ever be, because Elaine and I are going out and doing a lot of work marketing to get ourselves in a position where we're going to be able to raise funds. But for the most part, we're going to continue to focus on keeping our G&A very low. No intention to get an office. You know, no intention to change employment contracts or anything like that to get guys on full-time salary. I mean, we're going to continue to operate in a very bootstrap, I think is the appropriate description of it, method to try and keep those overheads low and keep as much money going into the ground as possible on the various projects.
Well, when you're drilling in Mexico, are you drilling right now?
No, we're not.
Okay. When does that start?
Well, we're in discussions with the driller about his availability, and we would like to start as soon as possible. So we're hoping that certainly within the next month, we'd like to see him mobilizing the site.
Okay. So what is that? What is that money basically that you just told me about that you're going to spend? What is that going to buy me specifically?
Well, the next phase of drilling in the Panuco district is going to be opening up more potential at depth at Palos Verdes. So we've done a good job of drilling off that vein in the shallower portion. And then the next phase of drilling would be to see if we can show an extension or perhaps an offset on the vein at depth and create some value there. So that's a portion of the money that was just raised will be going to initiate that process of exploration in Mexico so that we can add value in the Panuco district.
It's not a huge spend relative to market cap. So if you think about it in terms of dilution, but at the same time, I mean, what really matters on any company related spend really is the ROI, like return on investment. What do you think? So when I ask you, what are you doing specifically? What I'm thinking about is what's the main unanswered question? Like what question are you answering with that money? So let's assume that answer comes back positive. What do you think that does to the valuation of the company? Again, as I mentioned at the beginning, you're about $10 million market cap. What do you think that does to the valuation?
Yeah, I understand your question. I mean, when we're spending money on the project, it's always about creating value through the drill bit. And in the case at Palos Verdes, it's about as direct of application of exploration expenditures as you can possibly get. Because what we want to do is there's a vein that's established. We're in a bonanza grade silver district. We've got proven mineralization both inside our property boundaries and outside the property boundaries. So this is a place where we just need to go and continue to define extensions to the vein. And every time we do that, it just creates value in terms of what that project is worth. And because we're in the Panuco district, this is an area that is, I think, marching toward development. There's been a lot of success there in the last few years. And so I think that creating value on that project at this time is something that could see some real direct conversion to cash for the company. I mean, we see Palos Verdes as being a great opportunity for the company to realize some sort of cash value without having any dilution.
What would the timeline be on that last part? Like, when can you realize cash value?
Well, we're continually working toward trying to make the property as reveal the value of the property as much as we can, and we'll continue to march it forward. But there are a lot of things that we can't control there, like market conditions and other companies' plans and things like that. So we'll have to just continue to do our part of the job and make sure that we unveil that value. And hopefully sometime very soon, in the next year or two, hopefully we'll see an opportunity to take an exit there.
But that is like, that's a definitive corporate strategy you're going with, is just drill it now and potentially one more time and then seek a potential suitor for it.
Oh yeah, certainly we would like to seek a partner or an acquirer for that project.
Okay. Yeah. And you think that, again, when I say a timeline, I was mostly asking about drill, like how many drill programs do you think it's going to take for you to bring it to a stage where it's realistic to believe you can get a good deal on it?
I think the program that we've currently got proposed is a two-phase program. We're going to do a few shorter holes, and then there's 3 longer holes, 500 meters long each, that we would like to drill. And I think after the two-phase program is completed, I mean, as far as I'm concerned, that would probably be a pretty good point for us to stop and take stake.
Okay. Contingent on how good the results are, basically, I suppose.
Yes, yeah,
Okay.
I'm assuming that we've got a pretty good idea of what we should hit, and given the consistency that we see in the geology so far, I think that that's not an unreasonable expectation. But of course, you never know until you do the drilling.
Right. When do you think you're actually going to know, though? When are you going to have assays out?
Well, the turnaround time at the assay labs now is really good. So once we start drilling, we're hoping that after 1 month after the initiation of drilling, we should be getting pretty close to having the first results come back. And so then it'll just be some continuous stream of results until we're completed the program. And it wouldn't take us that long to do certainly the first phase of drilling is only going to take us a couple of months.
Okay, so it's you want to be drilling by mid-August and have results out by late September, then I assume. I mean, that's kind of how it's getting down to.
Yeah, that's a reasonable timeline, I think.
Okay, and when is it in between that time that you go to Arizona and start drilling there? Because I mean, this is a nice segue into the next part of the conversation here, is that you just got permitted there, so you can essentially, what's left for you is to get money, get a drilling contract, and start drilling. How do you see that number of events happening chronologically?
Yeah. Well, first of all, I'll say that I don't think that the work in Arizona is going to in any way be linked to what's going on down in Mexico. We'll be able to carry on the 2 programs simultaneously if needed. The next steps for Arizona are to get the money in place. Once we've got the financing done, to be able to facilitate the drilling up in hot breccia in Arizona, then we'll get a contractor on site as soon as possible. And we've been anticipating this for quite some time now. So we've been out talking to contractors and thinking about where we're going to house our crews and things like that. So we've got a lot of the pieces for the puzzle falling into place already in terms of how we're going to be able to conduct that program.
Well, what do you think is realistic though? Like when are we going to see a news release saying Prismo is now drilling in Arizona?
Oh man, I would love to be mobilized by late August. I think that would be, that might be a little bit optimistic, but that would be my desire.
But that's going to mean raising money in the summer doldrums.
Yeah, that is a possibility. We may be going out into the markets in August. Yes.
Is there a possibility for you to drill later on in the year too? I mean, I assume you can just drill year round.
Yeah, absolutely. And as a matter of fact, winter is probably the preferred time to be working in Arizona, but we can work 12 months out of the year there.
Right. So yeah, I mean, where's because you said I'd love to be drilling it at the end of August. Why? I mean, why not wait for the Mexican results or wait for other catalysts that can help you and wait for the summer doldrums to be over, everyone back at the office, and then raise, beginning of September, end of September? Like, what's the thinking behind wanting to drill there as quickly as possible?
I think hot breccia is going to be a major catalyst for our company, and it's really an exciting time to be exploring a project like this. This is a big opportunity for Prismo Metals to have a project like hot breccia, and the more quickly we can advance it forward, as long as we're not doing it too quickly, we want to make sure that we continue to conduct our exploration in a very methodical, well thought out process. But we've had lots of time to think about it, and I think that the next obvious stage is to go ahead and do our drilling. And the sooner we can get started, the sooner we have the answers that we're looking for.
Okay. Again, sensitive with the financing. I mean, you want to have those answers, but at the same time, you want to manage your capital structure too, right? So that's one thing. Are there other alternative ways for financing, like something creative, a JV or something else that you'd be seeking out?
Yeah, there are opportunities like that, but there's always a cost to it, right? No matter which way you finance. If you finance by equity, your cost is dilution. If you finance with a JV, then you give away part of the upside potential that you're potentially having. If there's debentures, there's all sorts of other things that you can do, but there's a cost to each one of them. And I think the reason that equity financing for the junior sector is the most common way of financing is because that's the best path forward for a company like ours.
And I suppose same question is the one for Mexico. What does that buy me specifically? Like you mentioned in a news release, that is going to cost somewhere around $3 million, I believe. 5,000 meters. You're going to drill essentially 5 deep holes is what you're going to do. What question will those 5 holes answer?
So this is hot breccia in Arizona. You're
Yes,
talking
yeah.
about 5,000 meters, and what we've done with hot breccia is we've really tried the best we can to stack the odds in our favor of success. And when you take a look at the geological evidence that we've got on the property, the fact that we're standing on the shoulders of the guys that were out working there in the 1970s and doing drilling, and they actually identified that there is a hydrothermal system in place at depth. There's a mineralized, highly strongly altered system there. But the interesting thing is, when they were doing that work back in the 1970s, the thing that they had in their mind's eye was the best project in the area was probably San Manuel, 35 kilometers to the south, 400 million tons of 0.7. Since then, one of the greatest discoveries in the history of our business, resolution, has taken place. 1.6 billion tons of 1.6% copper, 40 kilometers to the north. And when you take a look at the geologic setting and the structural setting of those two deposits, we're very similar at hot breccia to resolution. And so I think it's changed the art of the possible for what we could potentially find at hot breccia, and getting the drills turning will allow us to hopefully vector in and see if we can find a giant system like resolution, or even a portion of a resolution. It could be a real company maker type deposit. And the nice advantage that we have now is that we've got exploration tools available to us today that weren't available to the guys that were working there in the 1970s. Of course, the same fundamental science applies, but now we can do things like the ZTEM survey that we went out and flew, or we're using AI to interpret our geophysical results, and we're going to be able to use some of the vectoring tools that geologists have been able to identify in these big copper systems to help us, to guide us toward the center of the system, where you're likely going to have higher heat, more energy, and higher grades. So
I do want to talk about how you pick those targets, because that's an interesting thing to talk about as well, given that they're going to be rather deep and expensive holes too. But in that news release that you announced that you got the permit, you mentioned that you want to be you're going to be testing the stratigraphy below the volcanic cover. So you're dealing with a volcanic cover. You want to see what's beneath that volcanic cover in terms of in terms of rock types and so on and so forth. But I thought we already knew what the stratigraphy is like, or have I got that wrong? Like, why is that a primary objective of this drill program?
well, what we want to find is not only the details around the stratigraphy, but we want to find out more about the hydrothermal system that's altered it. And there's 6 holes that are drilled deep into below the volcanic cover right now. Well, 6 holes doesn't reveal everything there is to know about the area, and we need to get down there and learn much more, and hopefully work our way more into the heart of the system. And it's interesting. Exploration geologists keep on talking about exploration tools. Well, when you go to build a house, using that analogy, when you go to build a house, you don't just use a hammer, or you don't just use a square or a plumb bob. You use all the tools in the toolbox. And now that we're in 2024, we've got many more tools available to us as explorationists that we can use to help guide us in this system, and hopefully be able to zero in on the higher grades that are potentially in depth there. When our crews were out earlier this year, they were going out and individually mapping some of the fragments that we find in the breccias, and we were getting some really nice results. One fragment came back averaging 5.7% copper. Okay, so we know that we've got really high grades in the system at depth, and so let's go out and see if we can identify where those real high grades are, and how large and extensive that system is, and how high grade it is, because that's what we need. We need to get into the high grade, and we need to find it in size.
Well, but talk to me about these tools specifically. Again, 5 drill targets, picking them is not an easy task. Like if you're doing 100 drill targets of 50 meters each, you could go and kind of spray and pray. But with these 5 targets, you have to be meticulous. You have to be very specific about what you're drilling. So talk to me about exactly what you're drilling and how specifically you pick those targets.
Yeah, well, the ZTEM survey that we did in 2023 is really going to be an excellent guide for us, because it's a modern exploration technique that really does a good job of identifying conductors at depth. And the conductor that we've identified is right where we expect the limestone to be, which should be non-conductive. So why do we have a big conductor sitting 400 meters below surface? And one good explanation for that could be, well, if the limestone is strongly mineralized with copper, it'll become a good conductor. And so that's a good starting path. But how do we determine that there's a big conductor there? Well, a geophysicist goes through a scenario, he builds a model, and then runs a few scenarios sort of by hand. Not he uses the computer, but he kind of changes the variables and then runs another scenario, and might do half a dozen. If he's really thorough, he does a dozen of those. Well, what we're doing now is we're taking the next step by using an AI company out of California to see if we can actually optimize that geophysical interpretation. And they'll run millions of scenarios, and then we'll see where all those scenarios are, and then they actually use the computer technology to find out which of the best scenarios are the best, and then we can actually better test those with our drilling program. And then while we're drilling, we have the opportunity to go and use down the hole geophysics and we can rely on techniques that were used by neighboring properties that may have done this sort of thing successfully. And so we'll be working with local contractors if that's an option that we think we need to use. So that's just another example of the type of exploration tool that we have available to us.
Okay, so but DHEM, I suppose, is going to be is definitely a part of that, or is that more like that's something we could do?
It's something we could do, and
Okay.
we'll make that decision on the fly. It's really nice operating where we're at in southern Arizona because we have some very competent and as a matter of fact, some of the best in the business are based out of Tucson, so an hour and a half drive away from us.
Okay. If I look at the project map where Kennecott drilled historically, it's kind of like on the western side of the project, midwest of the project, if you will. Where are you going to be drilling relative to that drilling?
Yeah, well, that's right. They're right in the right area, just off the mark a little bit. But one of the things we will do is we'll take one of their best holes and twin it. And because we have the very brief description from those drill holes, but we don't have enough information. We certainly don't have the level of information that we would record if we were to go out and drill that hole today. And we don't have the assay results in general. So we'll go to one of the best holes that we think we can find, and we'll duplicate that by twinning it, and then we'll work our way out into the system from there. One of the interesting things that we're going to use to help us choose the drill holes is the surface mapping. And it's a really interesting observation that one of our geologists made, and that's that the property mapping gets pretty boring when you go to the edges of the property, and then as you work your way into the center, you get into more faulting, you get into more diking. There's lots of intrusive activity. You get all these breccias showing up and so on. And so if you stand back a little bit and take a very first level approach or look at it, you can see that there's a lot of complexity and a lot of chaos going on in the middle of the property. And that's the area where we're going to be concentrating our effort, because it's the heat source at depth that would be responsible for all of that chaos, and hopefully responsible for a lot of copper mineralization as well.
Complexity is a good point, because as far as I remember, you're dealing with polymictic breccias. So,
Yes.
so breccias where the clasts are essentially different rocks. It's not all the same rock. Does surface mapping work as well on polymictic as it would on monomictic?
Oh yeah, I think that the fact that it's polymictic is just a reflection of the fact that there was a lot of energy and a lot of heat in this system, and so the vertical transportation in those breccias is pretty significant. And as a matter of fact, we've identified some rock types that look like they're quartzites that probably came from below the limestones that would be the real target horizon.
Hmm.
And so we know that there was deeper rocks that actually got transported up through all of that, and transported more than a kilometer up to the surface. Well, that tells us there was a lot of energy in the system. Tells us there was a lot of heat. There was a lot, probably if there's a lot of heat and energy, there's probably a lot of fluid that came along with a lot of metals in it. And those are all the things that you're looking for that would be good indicators that you're going to have a system that's got some size and grade to it.
What's the metrics? Matrix. I'm trying to say it again. What's the matrix on that breccia made up of?
The matrix is intrusive.
Okay.
So yeah, all these fragments were transported to the surface in a slurry of magma. And then when it got to the surface, it solidified with the intrusive encapsulating all of these rock fragments. And some of those rock fragments actually include earlier stages of intrusive that are highly altered mineralized as well.
But essentially then you're going with the strategy that there's multiple mineralizing events making it more complex, or are you thinking one event created that whole land package?
Yeah, no, I'm pretty confident that there was multiple events of intrusive activity that resulted in the mineralization in the area. And of course, we know that the Christmas stock that's next door on the Christmas property, just to the north of us, Freeport has gone and done a drill program there, and they describe it as a polyphased intrusive. So multiple phases of intrusive magma came in successively.
Right. Okay. Well, why I'm asking these questions, it might seem unrelated to what you're drilling, but I think it is because I'm kind of trying to understand what is this drilling specifically about. And then so far, I'm getting that it's not necessarily about making, a big high grade discovery. You wouldn't be mad if you made that discovery, but it's really more about finding um kind of orientational drilling as well, like finding out more about the system because it's a complex system. Am I getting it correctly? What the point of this drilling is for?
Yeah, I think, ultimately at the end of the day, we do want to find a big mineralized system, but to get there, you have to really understand the geology and the deposit that you're looking into. And yeah, you can't jump forward to we're not going to be successful unless we've defined a giant system in the first program. I mean, it might take us a while to get there, but what you have to do is continually keep the end in mind, but don't skip over the steps that it takes to get there, because there's a lot of science that goes into this business, and exploration geologists have put in a lot of research and effort. There's a lot of papers that have been written on this subject matter, and each paper gives you another bit of understanding as to how these systems work, and it's extremely complex. So of course we start out with very simple models to be able to help drive our process forward, but at the end of the day we know that the model is going to be extremely complex, but you can never start with that image.
Well, what then is the goal? Like, what would success look like? Because if you cannot pull, like, you cannot say, "Oh, we want to make a huge high grade discovery off of our first hole." That's not a realistic goal to set. But what is a realistic goal for this drill program?
I think for this drill program, we want to make sure that we're into the hydrothermal system and that we're gathering enough data that's vectoring us in the right direction to where the heart of the system is. And of course, if we can jump forward and actually tap one of our first drill holes into the heart of the high grade, hey, that's great. We're definitely not going to turn that down as a result. But we're not under the illusion that this is going to be a simple process. This is going to be challenging and difficult. But I think we've certainly done everything. Once again, it's about risks in our business, and we like to stack the odds in our favor. One of the good ways of stacking the odds in your favor is coming up with a good project in a good location. I mean, we're in the heart of one of the most prolific copper belts in the industry. Another thing we've done is stack the team with guys that have done it before and had a lot of success doing it before. And so, we've got the personnel that are the right people in the right place at the right time. And then timing is one of the other things that we've done. I mean, this is a very exciting time for copper exploration projects because of the greater dynamics that are going on in the copper market. And we've seen the run up in copper prices, and yes, it's pulled back a little bit and now starting to run up again. But all of this is, the greater thing that people are thinking about in the market right now is that there's this looming supply crunch in 2025 where there's just not going to be enough copper to supply the demand that continues to increase year after year after year. And we're seeing a lot of weakness in the supply side. We're seeing a huge deficit in terms of the project pipeline for the major companies, and we're trying to fill that void. New discoveries. If we can make a new discovery at Hot Breccia, all eyes will be on us because the majors are very desperate to find those projects that will fill their pipeline for the decades to come.
I suppose it helps having those tailwinds, but it never really is a bad time to make a good copper discovery. So, whatever it is, if you find it, then the market is going to appreciate that, or at least so I hope. What would so getting the directions as to where is the heart of this system? That's basically this drilling. What would a good answer be? Like, is it in terms of, do you want to see a specific alteration package there? Do you want to see we talk about how the stratigraphy has been deformed potentially by hydrothermal activity. What specifically do you want to see geologically?
All those things you just talked about. I mean, a big part of what geologists have done in terms of research in these types of systems is talk about the alteration, and the alteration is really a good proxy for temperature. So when you're in the heart of the system, you're at higher temperatures, and as you work your way out into the periphery, you get into lower temperatures. And as a result, you see different minerals that are formed as part of the alteration footprint. And geochemistry can do that as well. So we've discovered, I mean, there's a lot of elements that we'll see in the heart of the system, and other elements that we're going to see more when we get out into the periphery. And of course, one of the elements that you're going to see in the heart of the system is copper. And so that's one of the reasons why we want to get to the heart of the system, is because that's where the big prize is. But there's other elements as well that will help you understand the metal zonation on the property. We can take a look at the historic work that's been done in the jurisdiction. And there's a lot of old workings on our property. And we take a look into some of those. I mean, we found old gold mines on our property where we went in and sampled the old workings, and we got up to 28 grams gold. And in other areas, we go in and we find these high-grade zinc samples up to almost 5% zinc, and so on. And so we put enough of this information together, and it helps, again, all of the pieces to the puzzle fall into place. And eventually you get enough pieces of the puzzle in place where you can sort of start to understand what the big picture is. And that's exactly what we're trying to do.
How long is it going to take you to drill those holes? I mean, there's again, deep holes. How many meters per shift are you hoping to get out of it?
My experience is that kilometer-long drill holes take you anywhere from 3 to 4 weeks to drill. And so it's our anticipation that 5,000 meters would take us in the order of 5 months.
Okay. So one drill.
Yeah.
Okay.
Yes.
Good.
Absolutely. For the first program, we want to do it one drill hole at a time, because we'll use the information from each drill hole. Even though we'll have the whole program planned out in advance, each drill hole, we're going to use the information to help adjust the program as we go forward.
How do those deeper holes work, by the way? Like, how do you expect them to work? Because I know that, I mean, there's potential risks of encountering voids, and there's different hardness of the rocks depending on where in the stratigraphy you are. Like, how? Yeah, talk to me about how that's gonna work, or like how it has worked in your experience.
Yeah, when I started drilling deep holes, the first deep program that I was on was in 2007. And prior to that, I'd been drilling maybe 700 or 800 meter holes was the most. But when I started at the Red Chris deposit in northern British Columbia, every hole that we drilled for 5 years was more than a kilometer long. And the longest was like 1,835 meters, I think, something on that order. So those are some deep holes. We started that program with a old Boyles 56 that was souped up to 140 horsepower. Well, now I take a look around at the drills that these guys have, and they're 250 to 300 horsepower. Deep drilling has become more of a norm in our industry today, and as a result, the drillers are more experienced with this type of drilling. They've got the equipment to be able to handle it, and they have drilling techniques that are better suited to dealing with some of those issues that you talked about. And as a result, there's a lot more success than there was back in the more pioneering days. I know it doesn't sound that long ago, 2007, but we certainly felt like we were pioneering back then, because we ran into a lot of problems and had some difficulties overcoming them. But I think that the industry as a whole has gotten a lot better at it since then.
So you don't, I mean, in terms of, I haven't really done a lot of reading on how voids work or how they get formed, but as far as I know, they're kind of unpredictable. Like, they could happen pretty much anywhere, irrespective of what the lithology or stratigraphy is like. I mean, is that the case, or like could it happen with you?
Yeah, we have a particular vulnerability to hitting voids when you're working in limestones, because limestones tend to dissolve under certain water conditions, and you end up with caves. I mean, that's when you hear about the guys that are going out caving. It's usually in karst stratigraphy, or in limestones and dolostones, right? And so there is a chance of there being voids. Quite often the voids are small enough that the guys can deal with them, and they drill right through them and collar on the other side of the void and just keep on going. Sometimes they're big enough that you actually need to case down through that hole and then and then drill inside the casing to get onto the other side of the void. So there are different ways of dealing with it, and it really depends on the local conditions and you know, is the cave rubble filled, or is it completely, you know, just water filled? Those things all play a role in figuring out how you deal with it.
Good. Well, thank you for the kind of side quest explanation here on deep drilling, but I'm always interested in how these things work. When it comes time to release assays, how are you going to do that? One by one, in a batch, all together? How do you look at that?
We'll assess that as we go along. We'll release the results as we deem necessary. So it's always been my preference to batch assays, you know, to put them together in logical groups. And if it makes sense to release them one hole at a time, we'll do that. But you know, my natural inclination is to bunch a couple of holes or 3 holes together.
Okay. And then in terms of timeline, the best case scenario, and this is a big if. I mean, it is if you get the financing during the summer and all these things, but if you're ready to drill, let's say September 1, the first hole is going to be done October 1, and then 4 to 6 weeks after that, assays. So November, mid-November is when best case you're getting the first assays out of hot breccia. Is that right?
Well, I don't think that's best case. I mean, I think that best case we would have our first results by the end of October. The backup at the labs really has been resolved. Those guys have done a good job of staffing up, and the turnaround times have certainly been reduced in the labs these days. So as long as we're able to take care of our end of the business on site and keep the logging and sampling up with the drilling, and usually that's not a problem with deep holes, we should be able to get relatively rapid turnaround from the lab. So hopefully by the end of October, we'd be looking at having our first completed results.
Good, good. Well, Steve, I've been trying to be as annoying as I possibly can. What's an annoying question? What's a question that you don't like being asked? Or what's a risk that you think I should be asking, but I'm not asking about?
Well, I think the most annoying questions are the ones that are really difficult to answer, like things about political environment. I mean, we got an election coming up in the fall in the U.S., and so presumably that could have an impact on how things look going forward. And in what way, I don't know. But you know, those are annoying to me because I can't really wrap my hands around it and answer it. But you know, what I love are questions about geology, because in some ways we can't answer those questions either, but we know how to answer those. You get the drill going and get out there, and that's the exciting part of our business, is getting out there and answering the scientific mysteries that we've got. And hopefully, you know, at the end of the day, we're going to be able to find a highly mineralized system that's not only scientifically interesting but economically interesting as well.
All right, Steve, well, that's it. I'm out of questions for today. Hopefully we can do a catch-up conversation soon when we have something back from Mexico. But yeah, it's this has been a good overview. Thank you so much for investing your time with me.
Yeah, thank you, Antonio. It's been a pleasure.